Ladies and gentlemen, good afternoon and welcome to our weekly trading session. My name is Thomas and I'm happy to see you all here. I apologize for a slight delay in starting this webinar. I needed to adjust something on my laptop. It turned out that some properties have changed. Anyways, that was some technical issues, but luckily I managed to solve them. Solve those issues quite quickly. So, anyways, how is everyone doing today? It's in some countries today it's celebrated. The 1st of May is celebrated as the Labor Day. Like in many countries of Europe, I would say like in most countries of Europe. I don't even know what are the exceptions. So all major economies today are closed. I think it's not the holiday in the United States though, so that is why we see pretty active trades in like US dollars and also stocks. Stocks should be open and today, and we also have quite a few new interesting trading news coming out from the United States. First and foremost, which is the basically the continuation of this history or this story of the First Republic Bank, and we are definitely going to talk about this in our trading session as well. So that bank is going bankrupt, and JP Morgan has agreed to save this bank, and basically they're doing it. So they will pretty much acquire this bank, and then they will be saving this bank from their own money, from their own funds. So something, yeah. And it's just the second major bank that is going bankrupt, and that's just the beginning. Probably that's what most people say, not just people, but respected financial analysts. So people who analyze, who monitor the situation day and night, every night, and for many, many years. Now, guys, at the same time, our today's session is going to last about 30 to 35 minutes. So let's not make it too long. And at the same time, I will be happy to answer all your questions, should you have any. Feel free to ask me your questions. Feel free to write them in the chat window next to the webinar window. And so welcome everybody. Hello to Jordan. Hello Mustafa. Hello Sabir, Isaac, Rakesh. Well, here comes the first question. So could you please explain how to use stop loss and take profit? Yes, all right. That's a wonderful question, and let's start with it. So first of all, I would like to show you a very interesting example here, and this example is Bitcoin. All right, so how could one probably trade Bitcoin in the last few weeks? So, or better say in the last 7 days. Yeah. So actually, as we can see, Bitcoin started dropping here. So first, at first it sort of climbed above this resistance level, right? So let's go back a little bit, some history lesson here, right? So this banking crisis started unfolding with this Silicon Valley Bank crisis, and then when such major institution collapse and people can only get back, I don't know how much money is insured, but I think it was insured something like less than $1.5 million, and for some people, it sounds a lot for us, but at the same time, many people who had probably like tens of millions in that bank. So that's the story. And anyways, so in those difficult times when traditional financial instruments, they start collapsing, so people, of course, they wanna save their money, and who do they go to? Well, in this case, they all went to the crypto market. So the crypto market offers us the following. You can invest money in cryptos, and it is a quite volatile assets. These are quite volatile assets, but at the same time, in times of uncertainty, at least these instruments or these currencies, these digital assets, are decentralized, and no one can really, of course, there are ways how you can lose this money, but at the same time, you don't really risk this kind of, so putting all eggs in one basket risk. So that's true when with a bank. And yeah, that was basically a major driver for Bitcoin prices, and also for Ethereum price and other cryptocurrencies as well, of course, to actually go up, to surge in price. So they all went in price from, say, 20,000 and up to like 29,000 rapidly. And then there was this moment of uncertainty where Bitcoin price stayed in this pretty narrow range between 26.7 thousand and almost 29,000 for about 2 weeks. I think it was like, yeah, it was like 3 weeks, three and a half weeks. And then on the 10th of April, so this level got breached for a few short moments, for a few short days, and then afterwards the price dropped. Now, so that was some preparation to answer your question. Now, what was happening last week? Last week we saw a major move from a major surge from 27.2 thousand up to 30,000. It was followed by a quick drop in price towards 27,000. Then it went up again. And then yesterday, I think, yeah, yesterday in the middle of the day, closer to the evening, the price, the Bitcoin prices went up again towards 30,000. But 30,000 is a strong, it's like a fortress. It's a stronghold. So it is very difficult for the price to actually break above this level. And based on that, we can actually gain some advantage over the market. So we know that there is this pattern that is called levels of support and resistance. And in this case, it worked pretty well. So we can see that this resistance level was pretty obvious, right? So you couldn't really confuse it with anything else. It's there. It's 30,000, and then the price went up and then went down. So what would the trader usually do in this case? Like one of the options. So in this option, in this case, what you want to do is you want to place some pending orders. Okay. So let me show you how it's done. So one thing you need to understand when enabling or when trading with the help of orders is that pending orders, I'll just cancel them and I will reintroduce them to the platform, to my chart. So this instrument is made for well, basically it's meant to simplify the life of a trader. So let's imagine, so you see this resistance level, but you know when the price is going to reach this level. So in this case, what you want to do is you want to like set your pending order. So let's imagine you want to open a trade in the downwards direction, like in the previous example here, like it happened yesterday. So this drop, and you want to do this when the price goes back up towards 30,000. So what you do in this case, so you set the price 29,000, and then basically you have two options. So on the OLYMP TRADE platform, trading platform, we have two options. We can either set a stop loss or we can not set it, right? It's up to us. So what is the consequence if you don't set a trading stop loss? So in this case, you might lose the initial amount of your trade, so which is $1,000. But the beauty of our trading platform is that you don't lose anything else above that, because on certain platforms, if the price goes against you, it can really go all the way. And in certain cases, especially if you use a very high multiplier or leverage, this can lead to a complete loss of your deposit. Because at the same time, you don't lose your position, hoping that the price will eventually reverse, and then you will sort of go back into this profitable zone for you. But usually what happens is that the price just keeps going against you, and you end up having losses, or losing all your money in the deposit, or having to add up additional funds into your deposit. Now, there is this thing, the so-called thing that is called trailing. I keep looking at trailing stop loss. It's just basic stop loss, but we can also make it trailing. Okay, so that's another advanced feature. So I press apply, and so I check the trigger price here is 29,900. Press down and voila. So here has appeared my pending order, and once the price goes here, then I will be protected. So the trade will open, and at the same time, I'm going to have a in my trade tab, I'm going to have this thing where I will be able to select my stop losses, the amount of stop loss. Okay, so the amount of stop loss and take profit. So you can always like remove them and then have a completely 100% manual control over your trades. So that also is another option, is one of the options, because it makes your trading very flexible, because you don't really set any like, so to say, hard KPIs, hard goals to your trade. But at the same time, sometimes you might end up in a situation where at some point of time you are making some unrealized profits, some real nice unrealized, some nice gains, but you didn't seize those profits, you didn't take those profits, and then the next few moments the price will just reverse and go down. So that is a little bit dangerous, and it's necessary to control your to manage your positions, so to say. Yes, the better way to put it is to actually how you manage your position, how you control your risks. All right, so basically stop loss is something that is meant, so in this case I have this open trade upwards, right? So I opened it on the 4th of April, almost a month ago actually. I was hoping, I was expecting that, so gold at that time, it was breaking above, it broke above the 2000 level, and I thought it was about to go towards 2200. All right, so this forecast so far has not come true, but by having a pretty wide stop loss, that has allowed me to control, to keep my trade, and I'm still maintaining this trade, and I'm still hoping that one day the price will go here, and actually the price actually needs to travel 10% upwards towards 2200, so a little bit above, and then once the price reaches this level, and that is really not something unusual for gold, so this can happen within in a matter of a few weeks actually, or even faster under certain conditions. So $3,000 can turn into actually $9,000. So my initial amount plus $6,000 above that initial investment. And also I'm here keeping my stop loss, which allows me to control the risk. So in case it doesn't go according to the desired scenario, and the price drops, so then I will only lose $1,350 out of 3,000. So that's basically how I minimize my losses and how I maximize my profits. So it is all about the so-called risk to reward ratio. So you wanna keep your losses small as possible, and at the same time you wanna let your profits grow. So that's the basic principle of why we use the so-called principle of stop loss or the instruments of stop loss and take profit in trading in general, because they allow us to have a better control over our trades, yeah, that's the story. So and as you can see, this so for example on Ethereum, the picture is not the same as it is on Bitcoin, so we don't really see that. We also see some like moves up and down, but we don't have such a clear border as, for example, Bitcoin has. So Bitcoin has a very distinctive level of 30,000 and maybe 7,000, which are the currently strongest levels of support and resistance. All right. So could you please explain? Okay, so I explain that, and by going back to Forex, Bitcoin, we can also set a pending order here at the price of 27. I think we should put like 27,250, right? So don't be greedy when setting these pending orders, because sometimes if you set a pending order a little bit like here towards the 27, towards the round number, you might end up in a situation where the price sort of drops, but your pending order is not just does not get triggered by the price, and then eventually it doesn't turn into a trade. All right, so that is this little trick with stop loss and take profit. So you've gotta put them first of all in the right places, okay, and also a little bit of luck will never hurt, because sometimes you just never know. You expect that the price will drop here, and then it just stops here at 27,230 something. 35 maybe was the lowest point, and then from there it quickly bounced upwards. So guys, what is next? So where are you nowadays? Why are you not taking Wednesday and Friday? Well, yes, the explanation, the answer to this question is very simple, because we have so many volunteers in our team who are willing to do these webinars on. So it's Kanak and Himanshu and also Himant, and I think we also have one more person who also does these webinars. And actually, at this point, we just have so many, like overwhelmingly big number of people who want to do these webinars. So guys, unfortunately, it's there is no room for me sometimes in these webinars. But I promise that from time to time, I will still be appearing in those webinars. So the next question is, what time frame should I be using? So when it comes to FTT mode of trading, the rule is very simple, and that is some rule that I usually try to follow myself. So the rule goes like this. So you take your time frame of analysis. So you analyze. Let's imagine you analyze chart on 1 minute time frame, and then you simply multiply this by 3. So you have this. So my current time frame equals 1 minute, and then I multiply this by 3, and I get and I get 3 minutes. So 1 minute multiplied by 3 equals 3 minutes, and then I press a trade downwards. All right, so that's pretty much how it is. The very basic rule. Now, I guess I think everything is fine with my stream. Just checked. Yeah. So guys, the thing is that you can apply this rule, and it's very simple, very efficient, very effective for FTT trades. Now, of course, you can analyze, and probably my piece of advice number 1 is to always go to the higher time frame. So at least 5 minutes, maybe 15 minutes, or most probably 1 hour. And the beauty of our trading strategies that you can see in our trading platforms, for example, Kind Martin. Right, so let's apply Kind Martin. So Kind Martin can easily be applied to any time frame that is there. So for example, let's select Asia Composite Index, and as you can see, with 1 minute time frame, we can always open 3 minute trades that with duration of 3 minutes, and usually that's kind of like the optimal one, the optimum duration. Now, the beauty of all trading and trading algorithms in general is that they can easily be applied to any time frame. So we go to time frame of 5 minutes, and then what we do here in this case, so we also multiply this time frame by 3, and we get 15, which is the basic duration of a trade. Of course, like I said, it's all about practice, and it's all about sort of like catering your catering to your own style. Okay, so every trader has a unique trading style, and also yeah, you can also open trades that last 12 minutes maybe, but you need to base that on your experience, because like I say, every trader is a little different and notices different things on charts, and also uses trading indicators in pretty different ways of analysis. Alrighty, so what is next? What comes next? So yeah, easily we can use 1 hour time frame. Okay, and the signal remains the same. The signal of the strategy, the combination of the, so I won't really go much into detail about this particular strategy, but the thing is that, yeah, we have this parabolic SAR dot, it's above the chart, and also we get the combination, the second layer of confirmation comes from the MACD indicator, and when it is below the chart, that is basically a signal for a downtrend. And also, guys, the same principle can be applied with forex trading. So most of our trading strategies can be also applied with forex trades, and there it's yeah, it's once again the same. So we have this the parabolic SAR dots. They are for example above the chart, and that is a signal for a down trade. And combining this main signal with the MACD line or MACD area gives us the final answer. So yes, we should open a trade downwards. Now let's open a trade here. Astro Index. Oh, it's not applicable to forex. Let me see. Indices. Asia Composite Index. All right, let's see. Ooh, went down so far. Asia is not doing that well. So now Europe Composite Index. I think it is kind of like the perfect signal right now because it is a fresh one. We have this reversal pattern. 2 layers of confirmation confirm us that the price is bound to go upwards. Because I look at the MACD area here and also look at the MACD, or sorry, the parabolic SAR dots here, and it kind of yeah, it can really make a pullback. So yes, let's open a trade, right? So I press, let me see, with the 500 multiplier. Yeah, I can actually risk it, I think. And so voila. So let's have a look at our at my trading goals. So my trading goal here in this trade, my take profit equals 200% or $3,000 net, and my stop loss equals 50% of the initial amount, and it is placed right here. So what I can do is I can always modify my stop loss. I can drag it down a little bit, and in case that's something I don't personally like to do, is you can also add up to the open position. So let me just squeeze the chart a little bit. So I press like that, and I can add additional funds in case I want to put my stop loss even further below the current price, so that there is a little bit more room for the chart to sort of go down, go up, go down, and eventually go towards my desired direction. Okay. And the same thing comes with stop loss. I can modify it. Now, another thing that you can do with your trades is you can set a trailing stop loss. So the difference of a trailing stop loss is that it follows it follows the price. So if the price goes up, then this trailing stop will also follow and go upwards. Now, when the price starts dropping, trailing stop loss doesn't go down, it stays in one place. So basically it's kind of like a way, an instrument that can help you maximize your profits, and, well, maybe not maximize your profits, but to sort of minimize the risk of leaving too much on the table. Because oftentimes what we do as traders is we leave a lot on the table. So for example, at some point of time we could be making plus 100% from the initial amount, from the amount invested, and then for a certain reason, for not having closed the trade with when it was showing us nice profits, nice digits, we end up just pretty much giving back to the market everything, everything or almost everything. So trailing stop is made to sort of prevent this from happening. Yes. All right, guys. I think I've answered that question and about time frame as well. And like, of course, for example, when I analyze charts, oh yeah, I think it's a pretty good signal here on Nasdaq as well. So I like trading according to our strategies, according to Kind Martin strategy in particular, because it is a very trendy trading strategy. So by doing some backwards testing, like you can always scroll, like go back in time a little bit, like roll the chart backwards, and you can see how much money you could possibly make, how many times you would have closed your trade would have closed with by stop loss, and you can sort of calculate how many points, how many pips, or maybe even how many percents of profits you could have made from a number of trades. I know. So that's kind of like this thing that can actually give you some sort of understanding how profitable your strategy can be. Alrighty. Guys, a few more things which I want to talk about today. So economic calendar. All right. So today is Labor Day in most countries, bank holiday in England, South Africa, South Korea, China, South Korea, I don't know, Singapore, Spain, France, Italy, Germany. Most of the developed countries are closed and having a day off, which is nice. At the same time, markets are still operating pretty well today. Next, tomorrow, on Tuesday, the 2nd of May, we have a real important news coming from Australia. And for those who like trading currency pairs that contain the Australian dollar, that's a great chance for you guys. So if you can wake up at 7:30 GMT plus 3, this time zone, so you can definitely trade this news. I don't even know. I think they're gonna change it. I don't think they're gonna increase or decrease this the interest rate. They're gonna keep it the same. But even by keeping it the same, there will be some. There's gonna be some real strong move on the chart. That's almost guaranteed. All right. So other than German manufacturing PMI is not that important, but another important thing is another important news release is the CPI report. So CPI report, it basically shows the consumer price index, or to put it simple, inflation. So consumer inflation, how much people now have, how much more, how much more people now have to pay for the products that they buy, the end users, the end consumers. And the thing is that inflation in Europe last year soared to the 40 years highs, not just in Europe, but everywhere in the world. And those prices remain relatively high. And we are going to see the progress in the government's battle, or the central bank's battle, against this inflation. All right. What is next? Now, Wednesday, we have FOMC statement at 9 p.m. GMT plus 3. So that's huge news. New Zealand employment change, also a very strong news. ADP non-farm employment change, yes, there's going to be very strong volatility. Next, on Thursday, we have ECB interest rate decision. So everyone expects that it will go up by 25 basis points. It's difficult to say, but I think they might do that, and also that might lead to further increase of the euro against the US dollar, but we will see. And Friday, of course, is the non-farm payroll. So I would say this week is really important. It's really packed with, it's not like super packed with news, but some of the most important news releases happen during the first weeks of every month. So that's quite important. And so basically this week becomes the driver for the whole month. We still have some earnings reports this week as well. Last week we had all the top 4 companies posting their reports. Amazon posted better than expected results, beating the EPS by almost 45%. Facebook had a great, actually beaten by 10%, but also they had a much better like revenue and other key parameters. Next, there was Microsoft, also beating expectations, and the last but not least, of course, is Google, which also beat the expectations, but we don't really see this on the chart, but the truth is that it beat expectations and is trading here. Now, one more interesting asset that I would like to talk today is, of course, brand, and we are having something interesting on brand. So the so-called gap closure pattern. So there was this gap on the 1st of April, or the 3rd of April, when overnight Saudi Arabia and other OPEC and other oil producing companies decided to cut down the daily output of oil, and that resulted in this huge one-day hike, one-day gap. So we closed on Friday at 79, and on Monday we opened at 85. So that's a major thing, and usually this pattern is it's called gap closing. So usually the price stays remains uncertain for a few days, and after that the price sort of drops, okay, and it closes the previous gap. Now, so yes, a few more minutes and I'm finishing the webinar, so stay tuned. Just a few more things that I want to mention. So let's apply the Fibonacci levels, and I think we might see a very nice, so here, so we connect this lowest point with the highest point here, and we are going to get a situation like this. So lowest point, highest point, and we are trading at the somewhere around 0.5 level, which is the middle of the Fibonacci correction or the Fibonacci levels. And from here, I think it will be pretty fair to open another trade for me, and this trade in the upwards direction, because we had an uptrend, we had a correction, and still fundamentally speaking, we are approaching the so-called driving season in the United States, when usually when daily or like monthly, weekly consumption of oil goes up by at least 25%, because people start driving. Okay, so Americans love to drive their cars, they love to travel, and they usually do that by car, and that is why it's called driving season. All right, so that is going to increase the further supply, the further demand of Brent, and I don't really see that many countries are now wishing to increase the output. So more people are willing to have to actually consume more oil, but not so much in terms of oil production. All right, guys. So, guys, in case one final line here, right? So whenever you have a problem with deposits, so kindly ask to talk with your VIP consultant, with your VIP account manager, because this person will be able to get in touch with you and will be able to help you resolve your issues in case of some lost deposits, some lost withdrawals. We always find these lost deposits and withdrawals, but when you contact your financial analyst, you can request that from customer support. So the process just happens much faster when you do it like that. All right, guys, I think I'm gonna stop here. Thank you very much for your attention. So probably we won't see each other this Wednesday because there is someone else taking care of the webinar. And I will see you next week on Monday. And we might also, we are thinking of reviving our good old format of the so-called marathons of trading. And hopefully we will be back with it quite soon. I don't know. And then we might do 3 or 4 hours of trading. I don't know how how you can watch that. Like, that's intense, but I know that from the experience, that previously people liked this format, and would watch it, and we also had a lot of entertainment on those events. All right, guys. I will stop here. My name is Thomas, so signing out, and wanna see you next week. So have a wonderful trading week. Pay attention to the news, pay attention to the economic calendar, and also keep learning, right? So, and Labor Day, so trading is also, it's the labor of the 21st century. So it is a really interesting, respected job. So give it enough credits, and put enough time in your education, and especially in the beginning stages. Don't chase the money in the beginning stages. First, learn how to trade, and then the profits will take care of themselves once you learn how to not lose money on the financial markets, and how to work with stop loss, take profit, and that money management thing in general. And of course, don't forget to request an additional consultation from a financial analyst, because you can have up to 4 trading consultations per month if you are trading on expert status. Right now, finally, this is it. Wishing you a wonderful trading week, trading day, wonderful, beautiful day, spring day. The last month of spring has begun, so I will see you sometime soon. Thank you, guys, and have a good day. Bye-bye.